No, sir, that's a tough one. I can't, I'm trying to put together the last week or two and then a few weeks before that, and the puzzle pieces are pretty difficult, I think, for anyone to put together. We've got a fairly hawkish Fed message. We've got a flattening yield curve. I think it's probably moving faster than most people, including the Federal Reserve, would imagine. We've got some really strong housing data. We've got a great labor market with the JOLTS data. We had a good ADP. Everybody's talking recession, but the two most important markets, the labor market and the housing market, look like they're on fire. So it's a confusing time. It's a confusing time with Fed policy and macro, and I think positioning definitely got very oversold. We got a little bounce. Maybe this is it, and we get to kind of dodge back into maybe a 44 to 4,600 range instead of breaking back up toward unchanged on the year.
I guess what I'm asking on the stock market are, can stocks rally if the yield curve does invert? We get that recessionary signal and earnings decline. I know you mentioned labor market. That's a lagging indicator. And housing, yes, it's holding up, but it is showing some signs of fading. The home builders are down more than 20% in the last month, or at least this year.
Yeah, the home builders are definitely taking a beating, and we've got a lot of input cost increases that are going to feed through and probably slow that down. So, but we're coming off of an incredible run, and I think we look around at any anecdotal stories. It's certainly houses are getting scooped up everywhere, right, left, and center. So I think, Sarah, I guess I come back to my main premise for the year, which is this is a year where the Fed's going to withdraw accommodation. It's going to be choppy. It's going to be messy. We're going to have a fight between those that think the Fed's losing credibility versus those that think the Fed will maintain or even increase its credibility. I think that's the most interesting macro debate there is. I think the maintain or gain credibility story is actually much more compelling, especially with where break-even inflation rates are from the tips market. But it's not a year where I think we're going to get a runaway upside. I really don't see that. And I think more importantly, though, I think the downside, while it could go more aggressive like it did earlier in the year, there's a lot of other nice kind of tailwinds to the market that probably mean it's not as bad as maybe some had feared in Q1.
Well, to your exact point, David, CNBC came out today with its Delivering Alpha investor survey. We asked investors and strategists and CNBC contributors what they thought the biggest risk to the market was for the second quarter and beyond. And guess what? Most popular response was a misstep from the Fed. Yeah. So there is this question of whether this yield curve inversion is signaling that the Fed is going to go too far with hiking rates and sink us into recession, or maybe the other misstep is that they just don't do enough on inflation. I don't know. What do you think about that risk for the market?
Sarah, I'd bet that if you and I were sitting in a room with Jay Powell and he knew that nothing was going to come out of it, that it was, a top seat, no discussion points would ever get, brought out. And we said, look, you could get inflation down toward 2% by the end of 2023, but you need a small recession, a couple of quarters of consecutive negative growth around 1%, just as we just had over 5% growth in the last year. I think he'd take that in a heartbeat. So
he'd be cool with it.
I think the bottom line is that a small recession is certainly within the realm of possibility for the Fed, a modest one, and something that I think they might even prefer to have if it meant getting inflation back toward that 2% level faster. I think this 7.9 number has them quite scared, quite nervous. And even if we are to get big drops in it fast, which may happen because of the comps in Q2, the comps in Q3 really stink on inflation. It's going to go probably back up. And it's just going to be a tough year to get that inflation number down. So all that hawkishness is there. It hasn't gone away. They could make a mistake, or actually that mistake of a small recession is exactly what we need, because maybe we got too much of the medicine in 2021 and 2020 when we were going through the darkest days of the pandemic. So that's just the nature of the beast.